Greetings, Principles of Accounting 2 students. Today we're going to cover job order costing journal entries. We see here I am in my study plan in the My Homework Lab tool that you guys are using this semester. And I came to my study plan homepage. It looks like I'm on chapter 19, but we all know that we want to be in chapter 17. So I'm going to go down here to chapter 17. Job order costing, and I'm getting a lot of questions about this, and they're good questions from good students that say, how do I redo a study plan? I've done it, I got the points for it, but I want to practice, and it doesn't look like you could do that. I've got nothing from 17 I have to master because somebody stayed up all night over break. I have all these down here that I mastered. Now the thing I want to cover today is actually adjust for over allocation and under allocated overhead, objective 17.5. Can't click on it. Looks like I'm locked out. What do you do? What do you do? So let me show you a quick shortcut. Actually, I don't know if it's a shortcut. It's a secret. It's not short. If you go under chapter resources here, you have all these chapters. Now these are all principles 1. Yay, you don't want to go back to those. But chapter 17, I can go in here and it gives me this screen here. So this is where you'd want to do your additional practice. There's also demo docs, your multimedia library, etc. If I go to chapter study plan, it's going to pop up this thing, which is all, here's the chapters, chapter 0, and that's just your basic how to enter answers, math review that you can do at your leisure. If I go down to chapter 17, I wanted to work on adjusting for overallocation. And it comes up, and now I can actually work on my study plan again, even though I've completed it. People love that. Now, the problem I wanted to work was problem 4, I believe. So it'll come up. Yes, and now I'm in the problem. If I want to work other problems, I can go up here. But for this video, let's stick to problem 1. So problem 1 gives me some certain transactions. This probably looks familiar for those of you that have had Principles 1. I could always click on here and see the entire list of transactions. And it's normal to be a little overwhelmed when you see that. I freak out and do that. Matter of fact, I'm not wearing my glasses right now. So I'm going to go ahead and work this problem for you. And I'm going to make some mistakes along the way, which that's just how I roll. So the first problem, I incurred and paid website expenses. So if you remember from Principles 1, there was this thing called paid, which is different than on account. So I know I'm shelling out some cash. And website expenses. Luckily, there's a income statement account called website expenses. Could be a different account system, would just be called selling expenses or general expenses. Come down here, let me check my answer. And it said nice work. I'm thinking that some of this is off the screen. Let's adjust the window so that you guys can see everything that I can see. All right, part 2. I incurred manufacturing wages of $18,000. 70% was direct labor, 30% was indirect labor. This one's a little bit more difficult. So I have some wages. That's going to be wages payable of $17,000. Remember, your direct labor goes into your work in process account. And your indirect labor goes into your overhead account. And let's actually go ahead and draw a little T account here. I don't know what this is going to look like. So when you actually do indirect labor, indirect materials, it's going to go there. Let's see if the erase tool works. It does. So then I have to come up here with my calculator, and I know it's $17,000 times 0.7, 11,900 went to direct labor. Now you could either subtract these two, or you could take $17,000 times 0.3, 5,100. Hopefully debits equal credits. No, something's wrong. What did I do wrong? I think I probably missed a 0. 5,100. Oh, yeah. I see what I did wrong. See what I did wrong? Oh, I told you I'd make lots of mistakes. For some reason, I got the crazy idea it was 17,000 because my glasses are over here in a drawer, and it's 18,000. So my bad. Oh, yeah, geez. Well, luckily that told me I was doing something wrong and I could troubleshoot. So what do? We come in here, okay, it's $18,000, and I just took that right from there. Woo! Okay, so then you take $18,000 times 0.7 is 12,600. And then you go $18,000 times 0.3. And as I get older, my eyes get a little bit worse. And they're getting worse a lot faster than I'm getting new glasses. Boom. Okay. Whew, that was close. So again, just reading the number right helps a lot. All right, so hopefully that's a $16,000. I purchased raw materials on account for $16,000. Relatively straightforward. On account means you're going to pay later, so you have an accounts payable, which should be right there. And then you should have a raw materials inventory somewhere. There it is. Boom. Look at that. That instills confidence. Used in production, direct materials of 6,000, indirect materials 3,500. All right, so we know it's going to be something like that. And the raw materials inventory is going to go down by 9,500. Where is that raw materials going? Some of it's going to work in process. Some of it's going to your manufactured overhead. Yes, all right. Whew, that was ugly. Recorded manufacturing overhead, depreciation on plant, 19,000. Plant insurance previously paid. That's important. 1,800. Plant property tax 4,000. So I'm recording manufacturing overhead. Well, it's telling me I'm going to record manufacturing overhead. Let's see, and I'm going to have 19,000 here. I'm going to have 1,800 here. And oh, the other thing you can do, you can always put commas in. That's not a problem. It's actually probably a best practice unless you're just in a hurry like I always am. So let's see, 19,000 plus 1,800 plus 4,000 is 24,800. And then I just got to figure out what to call these accounts. We know we're recording the manufacturing overhead. We know we have depreciation, and there should be something in here. Ah, yeah, accumulated depreciation. Something previously paid, so they're throwing a little curveball at you there. Like I'd be looking for insurance expense, but it was previously paid. So it's actually, we're crediting the prepaid insurance. Remember, principles 1, prepaid insurance is an asset, so you debit it when you pay it, and then as you expense it, you start crediting it over time. Oh, that was kind of rough. And then here it says credit property tax payable, which is, that's nice because I was looking for a property tax expense account. But apparently we already expensed it, we just didn't pay it. Normal. Alright, so far so good. Now I'm allocating manufacturing overhead. So remember, and let's go down here and let's draw something here. And that theoretically that's a T account. So your actual manufacturing overhead goes in here as you're incurring it. And then what you do is you take an estimate here and you put it into your WIP. Now in this instance, this estimate here, which we call an allocation, same thing, is going to be based on direct labor costs. Every problem might be different. You can allocate based on anything in the world. Here it's saying direct labor costs. So we have to stop ourselves and say, what are the direct labor costs? Well, I actually got a little bit easy because it's only one transaction here. This could have been in a million transactions, which we'll see in a second. Manufacturing wages of 18,000, 70% of which are direct labor. So here, let's do it the long way, 18. That's the one I did wrong before. Hey, cool. Times 0.7. It's going to be 12,600. Now, if you really know what you're doing, you could say, well, when I did that, the 12,600 went into work in process. This was indirect labor. Either way, so we're going to take 12,600, and we want 150% of that. So 150% in decimal form is 1.5. So 18,900. All we have to do now is figure out what accounts this goes in. We take our manufacturing overhead. Is that right? Yes, because what are we doing? Sometimes you always have to go back to the account, and I'm getting rid of overhead, which crediting if you're following at home, and we're going to debit work in process, which we all know is going to be there. Woohoo! Da, 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 da. Now we start getting a little bit more complicated. We completed production on jobs with costs of $40,000. Actually, now it's not complicated. Yeah, I can't remember how many zeros I put in there. All right, there we go. So when we complete a job, that becomes finished goods. And your work in process inventory goes away. It's no longer in process, so we credit that. It's now finished goods. Let's go ahead and do a T account there. There's your FIG account. There's your WIP. That's all we're doing here. Nice. Now we're selling it on account for $30,000 and the cost of goods sold is $12,000. My accounting lab likes to split this transaction into two. You really shouldn't. This should all be on one journal entry, but we're going to do it in two just so the computer doesn't beep at us. So you want us to start with the revenue, so that's easy. 30,000. 30,000. And then we have accounts receivable and sales revenue. That should give us our transaction. Nice work. Now we have to record the expense related to the sale. What's that? That's that cost of goods sold of $12,000. We made 30 grand, it cost us 12 grand to make 30 grand. In business, you have to spend money to make money. Either that or you're just cheating people. So here we've got our cost of goods sold. Remember that goes on your income statement. And we have our finished goods inventory. So our inventory is going down, our cost of goods sold are going up. Yes, look at that, fantastic. I am fantastic. All right, so this one's hard. We're gonna do this wrong. We have to adjust for over-allocated or under-allocated overhead. How do I do that? Let's see if I can take this here. This is your overhead account. Remember, your actuals are going to be debited. So here I've got 5,400. And this isn't going to let me... see, now I'm stuck on this screen. So hold that thought for a sec. And actually we can go in here. 5,400. That's an actual overhead that we debited. Pulled it right off there. Now let's go down to C. Nothing in C. But then in D we have another one for 3,500. And then down here we have another one for 24,800. So if we're doing the overhead account, what do we got? We've got 5,400. We've got 3,500. We've got somebody who can't really write on a computer screen very well. You've got 24,800, and that's all our actual overhead from the period. And we know that's going to equal 33,700, unless I miss something. Generally, I miss something. That's our debit balance. Now remember, this balance has to be 0. Now our allocated overhead comes here, and then we have to make an adjustment. So now I can go down. We have 18,900. So we subtract 18,900. And we should have $14,800. So when we looked at this, we had some big number here. I can't remember, 33,000. Let's call it 33. And then here we had 18,900. So we've got to make a $14,000 adjustment here to make this equal 0. And that just goes right into cost of goods sold. Yeah, boy, that just looks like something from a bad art class, doesn't it? That number to me doesn't pass the sniff test. Tells me I added something wrong. Normally I would add that again, but let's see what happens. Or I would do it in Excel. And actually, that would, you know what, if this is wrong, we'll do it in Excel just to demonstrate it, so then I can scroll a little bit better. All right, so what do we have here? We are taking your cost of goods sold and debiting it. We're crediting the overhead. This is also what we would call, if the numbers are right, we underallocated. Because throughout the period, we allocated less than what we needed. Oh, well, I guess it was right. Darn it. Okay. Well, that's the problem. You know what? Yeah, we're still got 4 minutes. Let's do this in Excel real quick. Excel's an awesome tool. The sooner you learn Excel, the sooner your life just improves immensely. Let's see, where can I put this so that I can... right there should work. So what I'm going to do, actually, let's stretch that out a little bit for formatting. I'm going to say overhead, and I'm going to put a little border in here. And I'm going to put a little border in here. I'm going to say cogs, like the railroad. And put a little border in here. Oh, see, look at that another little mistake I made. I don't know what that is. That's just nonsense. All right. This was supposed to be... And we also have in play another account. Let's just put it here for lack of places to put it. Work in process, which we've been working on for most of the chapter. Keep doing that. Stop doing that, Joe. There we go. Let's just no border that. Yeah, so you could do that forever. That's fun. Really, now we're focusing on the overhead account. Now remember, the actual overheads, as we're incurring them or spending them, are going to be put on the debit side. So what do I got? I got 5,400, which makes sense. We're debiting it here. We're debiting it here. Then we come down a little bit, and we got 2 more here. We got to 3,500. And so truly, when you're doing this in my accounting lab, you should have an Excel window open at all times so that you can work the problems. You don't want to get into something where you're just doing drop-down menus. I'm going to sum this, and that should give me 33,700. And because I'm an accountant and kind of crazy, I'm going to go ahead and... Ooh, not sure what happened there. I'm going to go ahead and format that properly. Now coming back here, there's our $18,900 applied, and it said applied somewhere on here. So this means that we're taking that, we've accumulated it here. It's all sitting there in this nice account of overhead, and as we're actually applying it, which is a mathematical illusion, it's going from there, from overhead to work in process. Totally straightforward. What else is in work in process? Well, raw materials, or direct materials, direct labor, right? All those things. This adds up. That eventually goes to finished goods. When it's finished, it's sold, which ends up in cost of goods sold. End of the period, what you do, you want overhead to be 0 so that you know that you've applied all of your actual overhead. Here, because you didn't apply 33,000, you underapplied. If this number was like 90,000, you would have over applied, and it's the same transaction just backwards. So let's work with what we have here. I know I incur 33,700. I applied 18,900, which means 14,800. Now, by convention, we just put it in COGS. There's some philosophical things of why doesn't it go in WIP. Something that big really should, but normally it's $1 or $2, or it's a very insignificant percentage of your manufacturing cost. So it's just easier at the end of the period just to expense it, get rid of it, and just move on. Now, hopefully, that's what we did down here. It is, yeah. Hey, okay. So that's all this transaction is here. Now, if when these goods are all finished, right, you'd have a finished goods count, which I really don't feel like doing. Why'd I start this? Oh, Joe. Bad Joe. All right, so we did a finished goods account. Let's make this a little bit larger. And if you were to sell it, all right, so now you have all the stuff sitting there in a warehouse ready to be sold. When you go to sell it, everything ends up in COGS. So see, it all works out in the end. And that's why you actually do this little convention here and skip the middleman at the year-end adjustment. So that's probably clear as mud, but that's okay. We're right over the 20-minute mark. And you guys have probably had enough. Good luck. Take care.